Picture this for a second. It's December. You're juggling clients or customers, holiday plans, family, and all that little loose ends that come with the end of the year. At some point, you finally log into your business bank account or open your bookkeeping software. The revenue numbers look strong. The expenses do not look very high. For a moment, you feel proud. Then a thought hits you. This might mean a big tax bill. Right after that, another thought shows up. Maybe I should buy something for the business before December 31st so I can write it off. Now you're scrolling. You look at laptops, cameras, monitors, maybe a new printer or a fancy chair. A friend once said, buying equipment in December helps with write-offs. So it feels logical. You tell yourself that this will help at tax time and you will figure out the details later. Now jump ahead. It's January or February. You're sitting in a tax appointment or in a Zoom call, going over last year's numbers. At some point you say, I bought this in December so I could write it off. Can this be deducted or not? If this sounds something you've done, you're not alone. A lot of business owners run this play every single year. The problem is that random December spending rarely works the way people expect. In this video, I want to make this very clear. I want to explain what a write-off really does and how timing works with equipment. You'll learn why this pattern usually means that bookkeeping is not where it needs to be and how working with a bookkeeping and tax team can fix this cycle. By the way, I'm Clenney. I'm a licensed CPA right here in Montgomery, Alabama. And I work with business owners who want bookkeeping and taxes handled together so they can focus on running the business and know where they stand when tax season rolls around. Now let's get back to your December cart full of equipment. The story running in your head in that moment is very common. It usually sounds like this. If I buy this now, I can write it off, and my tax bill will be lower. On the surface, that sounds reasonable. Underneath it, a write-off is doing something very specific. A write-off does not erase tax. A write-off lowers the profit number that it's based on. Think about it like this. Imagine your business brings in $150,000 of income in a year. After rent, software supplies, contractors, and other business costs, your profit for the year sits around $80,000. The IRS isn't looking at $150,000. The focus is on the 80. So when someone says, I want more write-offs, what they really want is more legitimate business expenses, so the profit on paper is lower. Two things matter in that sentence. The expense has to be legitimate for your business, and it has to be tracked in a way that shows up clearly in the books. A laptop that you use every day to run client work makes sense. A computer that replaces one that keeps crashing can make sense too. A high-end camera that sounded fun in December but never really fits how your work sits in a different category. All of those are equipment, but they do not help you the same way when tax season rolls around. Here's the part that gets confusing. Many bigger items count as assets instead of regular day-to-day expenses. Assets are often written off over a few years instead of all at once. Some rules allow most of the cost in the year, but when you buy the item, those rules have limits. So the idea that any big December purchase will wipe out a tax bill does not match reality. Most small business owners use a cash basis system. In that world, if the business buys a legitimate asset in December and actually owns it, that cost usually lands in that year. The big question is, does this truly serve the business? And was this wise use of cash, or was it a panic buy? That is where timing and bookkeeping connect. If books are current, you can look at that year, at the year in November or early December, to see how profit is showing up. And then talk with a tax professional about whether a purchase makes sense. When books are behind, December turns into guessing and shopping instead of planning. Another thing to pay attention to is when these conversations usually happen. For a lot of business owners, the very first time anyone talks through this is in January or February, when the year already is over. You walk into a tax appointment with a stack of receipts or a list on your phone. You say, can this be written off? What about this? If I buy this now, can it help last year? A good tax professional can still do a lot at that point. They can prepare a clean return, claim deductions you qualify for, and help fix mistakes. What they cannot do at that moment is go back to October and help you make different decisions with more information. Once December 31st passes, the year is locked. The numbers are what they are. That is why asking, can this be written off, for the first time in January always feels tense. The window for that year has closed. Underneath all of this sits one main issue. The books are not telling a clear story. When bookkeeping is behind or inconsistent, December feels like walking into a dark room. Money has moved in and out of the business all year, but there is no clean picture of how that year actually landed. When you do not have that picture, December spending turns into guesswork. Your inner dialogue sounds something like this. Income feels high. Maybe I should buy something big. Or expenses feel low. Maybe I should book a few things before the year ends. None of that is based on real numbers. It's based on fear, guesses, and whatever you heard from a friend or another business owner who felt the same way last year. This is the part where I want you to see the big pattern. When someone buys random equipment in December, the equipment is not really the issue. The real issue is that they did not have good information earlier in the year. There was no clear picture of income, expenses, and profit. There was no quiet moment to sit down, look at the numbers, and talk with a tax professional before the calendar ran out. That is where bookkeeping comes in. When your books stay current, the end of the year feels very different. You don't need to guess. You do not have to rely on feels like numbers. You can open a report, see what the business actually did, and make decisions from there. I see this all the time. When business owners first reach out to a tax professional, December is often already stressful. They are tired, trying to close out projects, get through the holidays, and stay on top of family life. On top of all that, they feel pressure to make smart tax moves. When they do not even have a clear view of their profit for the year. When bookkeeping stays current throughout the year, your story starts to change. Now, instead of waiting until January to talk, we can sit down in November, early December. We can pull a profit and loss. We can look at year-to-date income and expenses. We can see whether profit is higher or lower than last year. and by how much? From there, we can talk calmly. We can ask real questions, like, does this business actually need new equipment right now? Is this purchase going to help how you operate next year? Does cash flow support it? If we do nothing, what does your tax picture look like? Sometimes the answer really is yes. A purchase makes sense for operations, and a deduction that hits this year lines up nicely with what the numbers show. Other times, the best move is to hold on to cash, pay the tax that is due, and walk into the new year with less pressure and more margin in the bank account. That kind of decision is hard to make when all you have is a gut feeling. It becomes a lot easier when the books are cleaned up and a tax professional is walking through it with you. Now I want to clear up one more thing that confuses a lot of business owners. There is a difference between what you do in December and what you do in January. December is the month where you can still move the needle for that tax year. You can look at your books, have a planning conversation, and decide whether certain moves make sense before the year closes. You can choose to buy something that truly serves the business. You can make a payment. You can take a step that matters for that year's numbers. January has a different job. January is a time to gather everything. It's a time to get bank statements, receipts, and reports together. It's a time to let your tax professional prepare an accurate return with what already happened. It's also the time to ask, we do differently going forward. What did we learn from this year? And what should we do? January isn't a time to try to rescue last year with a new purchase. That door is already closed. January is a time to set yourself up so the next December feels calmer. This is why I keep coming back to bookkeeping. If you find yourself every year saying almost always shows up at the same time, I will deal with it with the books later. It shows up in the form of rushed receipts, long appointments, and a tax bill that feels like a complete surprise. It also shows up in these last-minute equipment runs that do not always give you the relief you hope for. When your books are up to date, you have 3 things you do not have right now. You have a clear picture of what actually happened this year. You have real numbers to work with when you sit down with a tax professional. And you have options while there is still time to use them. This is the kind of foundation that December feels less dramatic. So if you're watching this and thinking, this December's story is exactly what I do, I want you to know there is nothing wrong with you as a business owner. Nobody hands you a manual on this when you start. Most people are doing the best they can with the information they have. At the same time, you do not have to keep repeating that pattern. You can choose to get support with bookkeeping and taxes so that this year looks different. In my firm, we work with business owners in a way that connects those 2 pieces. We keep the books current, and we handle the tax side as well. That means your numbers are in one place, and the person sitting with you at tax time is looking at clean books, not a pile of paper and a guess. Here's what that looks like. Throughout the year, we keep your income and expenses up to date. Your accounts are reconciled. You can see what is happening in your business without digging for it. When fall gets here, we have enough information to talk about how the year is shaping up. Then when December comes around, instead of reaching, we're reviewing. If a piece of equipment truly makes sense for your operations and fits your numbers, we can talk about it with context. If it does not fit, we can say that clearly and give you a different next step. If the best move is to focus on tax payments, we can say that too. Then when you sit down in January or February to file your return, there are no surprises. You already had a conversation before the year ended. You already know roughly what to expect. If you're watching and thinking that December story sounds way too familiar, this is exactly why I am offering something special right now. I'm offering a free year-end tax strategy session through December 22nd. During this session, we will sit down with your numbers and walk through your books together as far as they are up to date. We will look at how this year is shaping up, talk through any equipment or big expenses you've already bought, and uncover deductions you can still take this year based on your situation. By the end of the session, you will have a simple plan to help reduce your tax bill and a better understanding of what needs to happen next. Whether this is getting caught up on bookkeeping, changing how you pay estimated taxes, or adjusting how you make decisions at the end of the year, these free year-end tax strategy sessions are only available through December 22nd. If you are in or around Montgomery, Alabama, and you want to go into tax season with a clear plan instead of guessing, use the link in the description to request your session. Thank you for spending time with me. I will see you in the next video.